A lot of people ask me, how can I reduce my taxes? There are three major ways. One is to hold your assets long term before you sell them and take advantage of the reduced long term capital gains rates, which are generally 15 to 20%. The second way to do is to live in a state where they don't tax your income or capital gains. And there are approximately 9 states right now that don't tax your capital gains. There are states like California, which have a 13% tax on your capital gains on top of what the federal government is taking. So that is a choice you have to make. Now, one of the states, we don't even think about it as a state, but one of the options here is to go to Puerto Rico. Puerto Rico is considered a U.S. territory. It's not a state. And because it's not a state, it does not have representation in Congress. So, as a consideration for that, because they don't have representation on the tax laws that they have, the US government cut a deal with Puerto Rico in the forming of their tax laws, where Puerto Rico actually collects the taxes that they would then pay to the federal government. And they can do it under their own laws. Bottom line here is Puerto Rico is the tax haven for Americans. You've heard of islands in the Pacific and in the Indian Ocean, but for the US citizen, Puerto Rico is your tax haven. And here's the net. If you move there, the gains you experience while being a Puerto Rican resident, your capital gains, are subject to a taxation of 0%, no tax, and while you're a resident there. Lots of rules around it, lots of restrictions, but it's very significant.